Welcome to my YouTube channel. I am Prajakta Kulkarni. In my previous video, we had seen the basics of taxation and how GST was evolved. Now we will see the basics of GST. Constitution of India. The authority to levy a tax is derived from the Constitution of India, which allocates the power to levy various taxes between the central and the state. India has abolished multiple taxes with passage of time and imposed new ones. GST is a path-breaking indirect tax reform which attempts to create a common national market. GST has subsumed multiple indirect taxes like excise duty, luxury tax, service tax, VAT, CST, entertainment tax, entry tax, etc., which are now subsumed under goods and service tax. VAT and GST are often used interchangeably, as the latter denotes comprehensiveness of VAT by coverage of goods and services. Presently, more than 160 countries have implemented VAT or GST in some form or other because this tax has the capacity to raise revenue in the most transparent and neutral manner. Most of the countries follow unified GST, that is single tax applicable throughout the country. However, countries like Brazil and Canada have adopted dual GST model. India too has adopted dual GST model, that is CGST and SGST, to be shared equally. Let us take an example. Suppose a dosa costs ₹100 and the restaurant charges 5% GST over it. Assume the rate as 5%. Base value is ₹100. CGST at 2.5% is ₹2.50. SGST at 2.5% is ₹2.50, and total to be paid by the customer is ₹105. Let us first understand the basic concepts of GST. GST is value added tax on manufacture, sale and consumption of goods and services. GST offers comprehensive and continuous chain of credits, thereby taxing only the value added at each stage of supply chain. The supplier at each stage is permitted to avail credit of GST paid on the purchase of goods and or services and can set off against the GST payable on supply of goods and services to be made by him. Since only the value added at each stage is taxed under GST, there is no tax on tax or cascading effect of taxes under GST system. Classification of goods and services. HSN code, harmonized system of nomenclature, is used for classifying the goods under GST, while SAC codes, services accounting code, is used for classifying the services under GST. Need for GST in India. Deficiencies in the value added taxation has led to GST. There were several taxes in the states such as luxury tax, entertainment tax, etc., which were not subsumed in VAT. We can claim input credit from the output liability. In the previous scenario, there was no free flow of credit. The darker arrows shows that the credit is possible, whereas the dotted ones depict that the credit is not possible. CST was always a cost. However, in GST scenario, there is free flow of credit. GST a tax on goods and services. GST is levied on all goods and services except alcoholic liquor for human consumption and petroleum crude, diesel, petrol and sale or purchase of immovable property. Features of GST. Subsuming of taxes at central, state level, destination based tax, taxable event, supply of goods or services, no differentiation in goods or services, no tax on tax, cascading effect, free flow of credit and comprehensive tax on goods and services. Objectives of GST: elimination of cascading effect of tax, ensuring availability of input tax credit across the value chain, reducing the compliances in tax administration, one nation, one tax, unified tax law. Benefits of GST: creation of unified national market, boost to Make in India initiative, enhanced investment and employment, ease of doing business, automated procedures with greater use of IT, reduction in compliance cost, benefits to agriculture sector, no cascading effect of tax, that is tax on tax, benefit to small traders and entrepreneurs by opting for composition scheme. What is cascading effect of tax? Cascading effect is when there is tax on tax, double taxation. Here we can see that a good is being manufactured, packed in the boxes and sent for sale. Now the goods are unloaded. Let us see the calculation part. 100 plus 12.5% excise duty is 112.5. Additionally, VAT will be charged at 13.5% on rupees 112.5 amount inclusive of excise. Therefore, total rupees 127.69. Charging VAT on amount inclusive of excise is itself called as double taxation or cascading effect of tax or tax on tax. Now the shopkeeper will sell it to the customer and again charge VAT on it. Thus 127.69 plus 13.5% VAT is rupees 144.93, the cost to the customer. Now let us see under GST scenario. GST will be charged on base value, that is on rupees 100. Rupees 100 into 18% is rupees 18. Assuming the rate as 18%, total is rupees 118. Now the shopkeeper will sell it to the customer and again charge GST from its customer. Thus rupees 118 plus 18% GST is 139.24. Now we can see that in the previous scenario, VAT was charged on amount inclusive of excise, whereas GST is charged on the base value. Thus, the cascading effect or double taxation is being removed under GST. I hope you found this video useful. Please don't forget to like and hit the subscribe button.